Hello, everyone. I am really excited today. We have a wonderful guest whose information and what she does is so important to your success. And you may not find it sexy, but if you've been on the wrong stick, the wrong side of what we're going to talk about here today, you'll know just how important it is. And so today we have Lindsey Roberts from Harquin Bookkeeping, and welcome, Lindsey.
Hello. Nice to be.
Yes. So before we jump into our conversation, can you tell us a little bit about Harquin and how you got started and what you do for independent retailers, our listeners?
Yes. So my name's Lindsay Roberts. We've been in business about 17 years this year, and we do bookkeeping, payroll, and sales tax and more for retailers. We are the largest retail specific accounting firm in the US. And as of last month, we are also the highest rated accounting firm on Google. So that's really awesome. And it really our love and care for our clients. We have a different approach than being the unsexy accounting firm that is all the time. That we actually care for our clients because we know they're real life people who are making their dream work and they need support in an area that's not their strength. So that is what Harquin's all about.
Wonderful, wonderful. And, as I said to you before we started, I'm so pleased that we're becoming partners because what you're doing is so important. And so let me segue that into my story. So, I had a retail business for 19 years, and one year, we were right sort of at that middle place. We were struggling, we had momentum, but we were still kind of in trouble. And then one day, I got the letter from the Internal Revenue Service that says you are being audited. And after the audit, they threw a federal tax lien on us. And if you've ever had that happen, you know that it's an experience you don't want to go through. And we made it through. We did all the things. We paid all the fines and the penalties and the interest. And one of the things that everyone should know is it's not easy. You don't just write a check and it's done. We called them bombs. For about 2 years, we'd get another bill saying, oh, you owe another $4,000 or $3,000. But it had finally washed itself through its system. And then about a year after that, we got audited by the state of Michigan. But fortunately, by that time, we had both our shit and our books together, and we breezed right through that. But the point of that story is I've been there, I've done that, and no one should ever want to do that again. But so I just want to share that because one of the things that I tell our community all the time, Lindsay, is if there's a mistake that can be made in retail, I've made it. And this is one of those mistakes. I thought, I mean, it was like cash was tight. And I thought, they're not asking me for anything. They must have forgotten about me.
Right.
They they hadn't forgotten about me. But one of the things that's interesting from our conversations and the things that I've read that you've put out there is you say that it's more likely that the state is going to audit you than the feds are going to audit you. So let's talk about that a little bit, if you don't mind.
Yes. So where people are more likely to get audited is for sales tax. And it's not necessarily just your state. If you're a retailer who sells online, you can be audited by other states who want you to prove that you paid either the right amount to their state or that you don't owe or you should be withholding sales tax from your customers. So sales tax is the big one, and it's the one that surprises the most people. And then another one is workers' comp. Um,
Okay.
yep. And some states have like a state-run program, and some you have to do it through an insurance company. But people don't realize that classifying employees correctly, or even having workers' comp, is a thing. Like you have to be protected. The joke I always say is, like everyone can relate to this. If you go to a urgent care and you're like snotting down, like coughing, you're like, "Is this a workers' comp claim?" Like everyone
Right.
Like, that's the one thing, like, of course it's not, but that's what they always ask you. And
Right.
an employee said, if somebody says yes, but you don't have coverage, the can of worms just got opened. They're going
Yes.
to get you and go back as far as they need to go.
And I think that that's exactly the right term. It's a can of worms because once they're in your can of worms or once they're in your books, I mean, both of our auditors were very, very friendly. Mrs. Welch, who was on the seventh floor of the Gerald R. Ford Federal Building in downtown Grand Rapids, Michigan. You think I remember all of this situation? She was as kind an old lady as you're ever going to meet, but we were in their orbit and we weren't getting out. So define, just so we're clear on this, what exactly is an audit and how does it look?
Yes. So an audit, there's various types. So it's in their purview of what they're auditing you for. So an IRS audit, they're going to look at your financials. What did you claim as a business expense? What did you claim the right amount of income? They do have algorithms where they will match up how much, maybe you've been 1099 for. Generally, retailers will get 1099Ks from all your merchant account services, so they'll compare that with deposits to your bank account and see if you claim the right amount. Uh,
Uh-huh.
they'll also, like I said, investigate your expenses. Did you write off the right things? Did you have personal expenses you wrote off as business expense? That is one of the bigger things they like to go for. Um, in meals and entertainment, of course. And I've actually talked to auditors before, and they said they love to chase cash. So if you have a cash based business,
Okay.
they will definitely like um, chasing you because some people think if you have a cash based business, you don't have to claim it.
And
Oh,
no, not the case. Not the case. Good, good. And so typically, is it done in person? Is it done now virtually? Do they come into your store? How does it work? How does it look?
they still come into your store. They generally will send you a letter requesting documentation, but as you already know, they have your tax return. They know they have the evidence that they think that might produce something. Now, I will tell you, after talking to auditors before, we've had people, two retailers actually come to us when they were in audit to get their stuff in order. Uh,
Yeah.
and I got to talk to auditors before, and one of them, they didn't find anything wrong, but they still had to negotiate because, like, hey, I'm here, I can't come back empty handed, which I thought was so awful.
Oh,
I like
that's
the mafia.
awful.
Yeah, it felt like the mafia. Like, let's negotiate.
Like
uh
they're commissioned salespeople or something.
yeah, and there's probably something to that. If the IRS is going to send someone to your location, they better come back with something, I guess, is
Right.
the thought. So they negotiated on meals and entertainment, and that's all they got. So it worked out really well. That was a major cash business. Um, so we had to document all the cash and where it went and how much was taken, uh,
Yeah.
and all that. And then another one was where she was mixing a lot of personal and business together. And so the IRS agent was like, at the time, and this was probably only, it can't be more than 10 years ago, the IRS agent said, well, anything you bought in PayPal must be personal because it was in her personal name and she didn't do a good job of segmenting it. Um, and she just was scared and paid whatever they said. And you said
Right.
earlier, they just kept sending you bills. That's one of the freakiest parts is like, are you keeping track of what you paid in and how much do I owe and how much is interest and penalty? Because they just start deducting money out of your account if you don't pay them, and there's no record.
Bombs.
Like, how do you know you didn't overpay? It is really scary. You don't really want to get on their radar because it's
Right.
time to get off the radar.
So let me just say something and then you can respond to it. So when I hear this and from my experience and from the way I like to do business and from the way that most of the people who follow us and who are in our community like to do business is most retailers get into retail because they like what they sell and they like to buy stuff, they like to go to the shows, they like to sell it. But, the bookkeeping is just sort of one of those other things that need to happen. So, the thing that I learned and what I'd like you to sort of talk about is number one it makes sense as a business person. If you are a business person, it behooves you to be a good business person and do things the right way. And managing your books, I mean, managing your books so you have accurate financial information to make decisions with is part of it. But managing your books so you don't get in a potentially business threatening situation is part of it. But the other thing is, it's the right way to do business, right? Paying your taxes is paying your taxes. You have an ethical, you have a fiduciary responsibility to pay as little as possible, but you have an ethical responsibility to pay what you owe. Does that I mean, do you agree with that?
Oh, absolutely. I think the biggest misconception I see with retailers is I'm not big enough yet, or I'm not in this exact. They have their thought process of when the perfect time is going to be to get a bookkeeper, and it's generally after there's a giant mess, or they got the letter in the mail, or they tried a really cheap option that did really poor job. Um, and now they have this giant mess to clean up. And so I want to encourage retailers to get started sooner than later. It's a lot more affordable if you get started, uh, the sooner the better. It's more affordable, and with the price of accounting software going up and up and up, it makes sense to have someone else do
Yeah.
pay for the software, and then you have to do it.
Right. Well, and not only that, but there's the sunk cost of I mean, there are absolutely retailers who love doing the books and they're good at it, but they're not the majority. The majority of retailers I know love to think about creative marketing ideas. They love merchandising and they do things like that. So if you're watching this and your genius, your retail genius is marketing, why would you spend your time doing books if you don't love it when you can do the things that you love that will have 10 times the return of the investment? This is the mistake that I see people make is they're trying to save money by doing the books themselves when in actuality it's costing them money because they're not putting their energy and their expertise and their passion and their creativity where it has the highest return. So, do you agree with that?
Exactly right. And then besides, as a business owner who does her own books, because I own a bookkeeping firm, of course I do my
Right.
like by the time I get my own bookkeeping done, I don't want to look at it anymore.
Right.
There's no analysis. I mean, sometimes I'll do it for fun, but like there's not a lot of analysis. There's no double checking, which I can double check myself, but if this is not your like regular job, no one's double checking. Is it right? Am I paying the right amount? And when we talk about sales tax, I'll tell you one of the biggest pitfalls that people fall into. Um, but they're just they're what do you call it, in a vacuum chamber. They have no idea if they're doing a good job until something bad happens, and then you know everything blows up. It,
That's perfect. And that whole thing leads us to the next thing that I'd love to talk about, which is bookkeeping itself. So let's talk books here. So red flags. Two things. One is uh, what can somebody who is a little messy, and you know who you are. If you're watching this and you're a little messy, you know who you are. So what do you say to them? And then does that messiness necessarily lead into a red flag? And what are the red flags?
so messiness does lead to red flags. So I would encourage you to at least have a second pair of eyes look at it and check your work. One of the biggest problems when people don't have anyone checking them, but yet they still use a CPA to file their taxes. The CPA assumes that the client had did their checks and balances, and everything looks good, but then the client assumes that CPA is checking their work, and they're not. So when we onboard a client, one of the things that we do is we look at the books as they currently are and try to understand them and try to identify any issues. Um, for instance, we had a client who had over $40,000 in an asset account called Payroll. Can't remember what it was called, like Payroll Advance or Pay something. And
Something.
something I can't remember now. It's been a few years. I can't remember, but it was an asset account, and they were putting their payroll taxes there instead of expensing them, and the CPA didn't check it. So over 3 years, there was $40,000 worth of employer taxes. And when we onboarded them, we're like, "Hey, what's that?" CPA looked, and he didn't claim employer taxes on 3 years of returns. So he had to go back
Right.
and fix them. So even if you have a CPA that does your taxes, that does not necessarily mean they're going to check. I like to tell people that they get paid a flat fee and they don't get paid to care. You're hiring, for most of the time, you're hiring someone to follow your tax return. Now they can, you could ask them to do more, but it's not included in just filing a tax return. They're assuming the data you're giving is right, and they'll file it. So that is why bookkeepers exist. It's something that they do. Their whole career is doing the day to day. CPAs
Right.
necessarily gifted in the day to day or keeping up with the different softwares. One of the things that Harquin does is we have a lot of experience with all the different platforms that you can sell on. I'll give you a fun example. So Shopify, everything connects to Shopify. So we have people that sell on Facebook. When it dumps in, the sales tax from that sale was already paid out through Facebook,
Yeah.
but it's also counted in the Shopify sales tax number. So you have to know to deduct that so you don't double,
Ah,
like all these trippy things. Like there's no way people know all of this, you know,
right.
without double counting sales or missing money and double paying sales tax. It is tricky. The more tech
Right.
it gets trickier.
So, and let's go back and talk about something. In fact, this week's Retail Buzz sort of talked about your financial team. And, most of the people who are watching this understand this, but some don't. And it's worth reiterating that the bookkeeper enters and makes sure that everything it's in its right place and that the information is accurate and you know is accurate and everything in its right place. Your accountant then takes what the bookkeeper did and files taxes based on the information given to them by their bookkeeper. So I mean, does that sound like an accurate definition to you?
Yes, that's
Good.
exactly right. And the bookkeeper does the day to day, asks the questions as time rolls. Um, like for instance, a really easy one is if you were moving to a new space and you paid a lot of money in rent the first month and then not the second month, is that a security deposit? Okay, if it's a
Right.
deposit, it's an asset, not an expense. Asking the
Right.
questions as the time rolls by instead of a cram session in January and February trying to remember what you did last year.
Yeah. Yeah.
So, yes. And then another distinction is having a tax preparer and a bookkeeper separate benefits you because people don't check their own work like they would check another's work. So you don't,
Ah,
separation of duty. My old
that's interesting. That's great. Thank you for yes.
my old accounting professor said you never want your warehouse manager taking inventory because they don't, you don't want to put your
Right.
harm's way because they don't have a separation of duties. So if people think about that like that, it's pretty obvious that you wouldn't want that. And generally, we see bigger mistakes where a bookkeeper and a tax preparer were in the same firm or the same person because people don't check it.
Yeah.
Every human being is guilty of that, not checking their own work because they feel like they're familiar with it, that it's
Right.
right, but you always need a second pair of eyes.
That's so astute, and I hadn't considered that. In fact, yes, that's wonderful. Let me just sort of add one more thing to this, because I mean I love CPAs and they're necessary. They're an important part of your team. But to everybody who's watching this, one of the things to recognize is CPAs are by nature and by training, they look in the rear view mirror. They are evaluating what happened in the past and creating all the things that happen because of what has happened in the past. But they're not entrepreneurs. Entrepreneurs don't look in the rearview mirror and nearly as much as they look through the front windshield. And so, what I always tell people is that your CPA should be part of the financial decision making process. But too many people say, "Oh, my accountant gave me this advice," and they treat that advice like it's the gold standard. And I'm just looking at all of you and telling you that it's not. And so, so having somebody, having a consultant or a coach or an outside person who can really help you look at the data, look at your books and make decisions outside of what happens with your tax preparing is probably important. Your CPA is important. They have insight, but they do not necessarily give you the right advice for you as an entrepreneur. Do you agree with that statement?
Yes, their purview is very narrow to taxes. And
That's
yeah, and sometimes they're not necessarily seeing the big picture. And in my experience too, and one of the reasons we decided to have a retail specific team on our team is because a lot of them don't understand retail, and that is scary. They don't take, and they shouldn't take the time to know all, like, everything about Shopify and everything about common sold and everything. There's just so much to know. And because they are required to keep up on tax law and you want them to keep up on tax law, they don't have time to keep up with all the technology that's out there. So you want somebody the day to day knowing what's going on, and they are looking at it from their point of view. But like Bob said, having a retail specific coach or putting advice into your life is very beneficial. But they're all coming from different angles, so you're getting a well-rounded view.
right. That's exactly right. So your job as an entrepreneur, if you're listening to this, is to take, if you've come this far, if you have your own business, you have developed some gut instincts, you have developed some experience, you have some wisdom, even though people tend to downplay their experience and wisdom, just recognize that you've got some chops. And so your job is to listen to what everybody has to say and then make the decisions that's best for you and your business. So that's great. So let's loop back around because we were talking about bookkeeping. Red flags. Share some red flags with us, please, Lindsay.
Yes, for bookkeeping, I have a few. So I already talked about cash a little bit. So
Yep.
the IRS for sure chases cash. And if you are um, a person who sells outside of your main point of sale, um, we have some clients who will sell in Shopify, but maybe go to an event and
Yep.
they'll sell stuff outside of Shopify. I want to have a warning for you too. So let's talk about general cash. So when you're doing your bookkeeping, you are ringing up how much sales were cash. Cash then sits on the balance sheet until it's either deposited into your bank account, until you spend it, or until you take it home because it's yours and you're the owner and you're allowed to. How what we run into almost every year, there's probably about 20 or 30 retailers this happens to. We tell them every month, here's your cash balance. It just keeps growing up and growing and growing and growing, and you're not depositing it. Where is it? So we have people that end the year and their cash balance is $50,000. Where is it?
Where is it?
Yep. Sometimes we find out that an employee was stealing. That does happen.
Uh-huh.
And we have really specific advice for people who deal with cash and how to protect yourself from
Yeah.
stealing. It's like an age old thing. People steal. That's just how it goes.
People steal 100%.
And that's retail, right? People walk out with stuff, I'm sure. Um, the other thing is if you spend it, you have to have documentation. So while I love cash and what it means for the world to have cash and not make everything electronic, once you spend it, it's gone, and if you forget to document it, you don't get a write off. So
Right.
um, so people spend it without documenting, or they'll keep it without documenting. And so what happens at the end of the year, the client's like, well, just put it to owner's draw, I guess, because I don't know where. So then we're making a
Yeah.
$30 adjustment to owner's draw, and that's just really no way to run your business. For
No.
we have a way for you to track it as throughout the year, so that there's no no chance of this happening, but it is heart wrenching. Yep, I lost 30,000. Don't know what happened.
Well, and you're paying taxes on that, right?
Yep. Yep.
Yes. So, and so I just want to sort of back up because I think this is so important for people who are watching this. If you're watching this, you're interested in this subject. And if you're interested in this subject, what I want to share is this is not a cost. This is an investment. A cost is something that money that goes away. An investment is something that has a positive return. And all of these little things that Harquin, mistakes they'll keep you from making, and advice that will keep you keeping as much of your money as possible is, I mean, it's just so invaluable. Dan Sullivan's got this concept called who, not how. And too many of us, retailers, entrepreneurs, whenever we have something to do, we think, how can I do this? But what Dan Sullivan says is the question is not, how can I do this? The real question is, who can do this faster, better, easier, more efficiently? Because those are the people who should be doing those tasks. And that's why, we love this partnership, is because you're a who for everybody who's trying to figure out the how. In fact, Indy, could you put Harquin's just their website in the chat for the people who are here, and we'll get back around to it later, how people get in touch with you and things like that. But so let's move on then, if you don't mind. Or do you have any other questions or comments so far?
The only other one with that is a very common thing for people. You said, what's a common red flag for bookkeeping?
Yeah.
Um, a lot of people, when they're doing their own bookkeeping, or they have a maybe an inexperienced bookkeeper, they'll not break out sales tax for when they collect it each month. So one of the things we do is we break out, like, okay, I'm expecting to receive $15,000, and 3,000 of it was sales tax. So we'll, instead of putting that to sales, we put that to the liability, so that we can see $3,000 of sales tax go out of the account, and then the liability goes to zero. Well, I will tell you that 85% or more of clients that come our way put every deposit to sales and then just pay a sales tax number.
Uh-huh.
They have zero clue if they're collecting and paying the same amount. We had a very large retailer who hit it big during the COVID season and was hitting um, Nexus in over 40 states. She went from 2 to 40. It was huge, lots of work. She came to us for bookkeeping because obviously at that point she's like, I definitely need bookkeeping.
Yeah.
That she had hooked herself up with TaxJar, and they were auto paying. She would collect $100 in a state and they would pay 5,000 because she didn't set it up right, because there was no human being saying,
Who was
why if
an
I got
expert?
it,
Yeah.
why am I paying 5,000? Because there's no human
Right. Looking at it.
for months and months and months with a bunch of different states. So
Yeah.
for over 30,000 back. Some of the states, they were just so mean and hard to work with. She just was like, I'm done. I'm not going to pursue. But and all because nobody was separating it to see if TaxJar was doing the right thing.
Right, right, right. And this is another example of being penny wise and dollar foolish, right? So, yes, you can always find a service that will do it for less money, but getting it done right, it costs a little more, but the long-term benefits, for all the things we're talking about, you've got good numbers so you can make decisions based on truth. If you're going to be a good entrepreneur, if you're going to be a good business person and you're making decisions and you're building strategy on numbers, you need those numbers to be accurate. And number two, all the things that we're talking about here, you're not wasting money by things happening incorrectly, and you're making money because things are happening the right way. So absolutely, I absolutely love that. So payroll. Let's move on to payroll and workman's comp. What are mistakes that you see people make with payroll? You're kind of smiling. So I think that says that people make a lot of mistakes with payroll. Is that what I'm guessing?
Well, so being in business 17 years and seeing hundreds and hundreds of business,
Uh-huh.
there they come. The most common mistake with payroll is people try to do it themselves, and mess something up, and then it's kind of ripple effect. The biggest one I've seen, well, two, is people will try to do it with, like, say, QuickBooks Online, and they mess something up. We had a client mess something up the week before W-2s went out, and then it automatically sent W-2s out, and he contacted Intuit for help, and they were 6 to 8 weeks out.
It's
I was like, well, you can't wait 6 to 8 weeks because it has to be
yeah,
January 31st. So
yeah.
involved, and we fixed it, but people have zero support. They don't understand that they don't have support until something goes wrong and they go to reach and there's nobody there. That's the really scary part. So DIY is cool and all until you get the letter in the mail that you underpaid something or you didn't file on time, and now you owe interest and penalties. Um,
Yes, interest and penalties. And by the way, as somebody again who has been down this road, the interest is not small and the penalties are not small, and they compound, and that they lead to those bombs, those letters that sort of keep coming. Oh, you need Mackinac Kite Company, another $3,000, another $4,000. It got to the place where I'd get a hitch in my throat every time I saw an envelope with the Internal Revenue Service on the return address section. So that's wonderful. So, and a lot of people, I see people think they're being smart by putting their employees and listing them as contractors. Is that smart? Can it be smart to talk about employees versus contractors, if you don't
yep,
mind?
yep. Um, so there's been a lot of chatter about this for years. I know that our government would love to have everyone as an employee because obviously the
Yeah.
government and the state get a lot more money. But I'm a strong proponent of doing contractor when it makes sense. The problem is when you have someone who's clearly an employee and you're calling them a contractor. So what I recommend is defining the relationship. Does the person get to make their own schedule? Do they provide some or all of their own equipment? And if the answer is no, then they're an employee. We had, this is really funny. We had a restaurant open up, and they're like, "Yeah, everyone's a contractor." And I was like, "But what are you going to do if someone chops off their finger?" And she's like, "It happened actually yesterday." I was like,
Oh,
"You have to, if you're dealing with knives, do an employee. Like, obviously,
yeah.
they're using your knives. Obviously, they're an employee." So we always say define the relationship. So if you like if Harkwind were to work for your business, obviously we'd be a contractor, but we have an agreement that says we're not employees. Like, we understand.
Yeah.
So like, for instance, you might have someone who comes and cleans. They're a contractor, but I would recommend that you have a contractor agreement that defines the relationship. I understand that I am not an employee. So yeah, so defining the relationship and being honest. So if you have somebody selling things and restocking, that works every day at a schedule that you set, they're an employee. There's no ifs, ands, or buts about it. But if
Yeah.
somebody who does, we see a lot of time where people for retailers who do advertising or photo shoots, and so they're sporadic. They make their own schedule. You pay flat fee. Like, then
Yeah.
you make the argument that
Yeah.
they're
Yeah, and so let's go back to my assumption, and whether everybody has a choice to make their own, of course, but doing business the right way. Don't make somebody a contractor because you think it's going to save you a little bit of money. If they're a contractor, make them a contractor. If they're an employee, make them an employee. Because really, truly, I was talking to somebody recently, and they do every, like if they buy a TV, they write it off, and it's like, at the end of the day, for me, if you're just trying to save a little bit on taxes, the sleep that you lose by trying to save a couple of dollars, generally, for me, isn't worth it. So, before we wrap this up, Indy, are there any questions for Lindsay?
No questions right now. I went ahead and put the link in so people can go ahead and get more information and also get an estimate. And Caroline's been in the comments as well, answering as they come
Okay.
through.
Good. And so for everybody who's watching this, if you do have any questions, we're going to sort of wrap this up. But then, we'll, I mean, assuming, Lindsay, will you stay around and answer any questions that anybody might have?
Right. Also, Caroline is watching as well. So,
So,
yeah.
okay. And Caroline knows the answers?
Yep. She normally ropes me in
Okay.
the questions. Yeah.
Well, she knows some of the answers, right? No, I didn't mean to put you on the spot there. Okay. So, audit readiness, because that's really, I mean, that's really what this whole conversation is about, is, doing your books the right way so that you don't get audited, and if you do, what happens? So audit readiness. What do you do now? What should happen now?
Well, I would just recommend that you take a sober look at reality now, especially before going into Christmas season. What normally happens with retailers is they're really tied up in getting prepared for Black Friday and Christmas season, that they totally ignore all accounting boring things. And then Christmas hits, and then reality hits like a punch in the face that, oh no, January is only a few days away, and I have to do 1099s for my vendors, which includes your landlord.
Right?
And I have to have books ready for taxes. Um, so January hits hard. And so for retailers, I super recommend you get your ducks in a row now. Don't wait until after the busy season of Christmas, because that's what everybody and the brother's going to do too.
That's so interesting because I had a conversation with a coaching client today, and he was talking about when to do his quarterly, team meetings. And he was like, well, should I do it in December or January? And I was like, Peter, do it in January. Nobody's going to be thinking about planning for the year in December. December's a head down, but you make it happen. You'll be able to take a breath when you get in January. Same thing. Do it now so that you don't get behind the eight ball. So, biggest piece of advice. What's your biggest piece of advice for independent retailers for our community?
I would just recommend that, again, get a CPA now. Don't wait until March or April, because they'll be too busy and you'll file an extension for sure. Look into your sales tax. If you're not breaking out sales tax on your balance sheet as a liability, do what you got to do to get it there, to make sure you are paying the right amount. And if you are afraid to switch to a bookkeeper, please get a quote. I'm sure the link is somewhere, and you can get a quote, a free quote, just to see in reality what is it really going to cost you. I know every time I think of, like, if I ever had to hire a lawyer, it'd be like 5 grand minimum.
Right.
That's not the case with an accountant. Some of our retailers pay around $100 a month, and some of them pay $400 a month because they're bigger. They have more sales tax returns.
Yeah.
Everyone's different. It doesn't hurt anything to get an estimate and just see what reality is.
And I think that that's so that statement is so spot on. Whenever I talk to people who provide services, whether it's a buying service or you know any service, just have the conversation. Have the conversation. You're not signing a contract, you're having a conversation, you're understanding the process better, you're learning, and you're getting information that helps you make a better decision. So I love that. And I saw some questions pop up in chat here. My chat is not popping up. So
I can go ahead and read them to you if you'd like.
there you go. Great. That's be
Okay,
great. Thank
so
you.
you're welcome. So the first question we had, Lindsay, was from Blue Delia Designs, and she wants to know, does your company also check reports like inventory and giving suggestions?
So yeah, so part of what bookkeeping is we produce financial reports, and for retailers that includes making sure we're doing monthly adjustments for inventory. That's one of the things that a lot of people forget, and they just do an end of year adjustment and their numbers change dramatically. So we do monthly inventory adjustments. But yes, we not only produce them, but we can meet with you and go over what they mean. And then we also have some CFOs on our team that can help you make decisions about, expanding, paying yourself, whatever the case may be.
Good, wonderful. And I just want to say hi. I assume it's Angie from Blue Dahlia. So hi, Angie. So anyway, I'm just go ahead, Caroline. What's the second question?
Sure. So what about items that you decide to keep from inventory? Charge yourself with 100% discount, question mark. Remove
Uh,
from inventory. She's heard so many mixed things. She doesn't know what to do.
Yes, this is a very common question. We actually, in our Facebook group for retailers, we get this maybe 3 times a year, and we generally just copy and paste it because it's hard to find. There's a lot of stuff, but there are a couple different options. The state would have you charge yourself full price, um, but the minimum they would want you to charge yourself is the wholesale price, and then you would pay what you would call what's that called, use tax. Basically, the end user has to pay tax. So either you're going to charge yourself sales tax or pay use tax because you decided to keep it. That's the technical term. Um, I always tell people to be consistent with it and not be flippant. So we have some people that use stuff for advertising. Well, that could be an expense because it was used for the business, but again, you have to pay use tax. Um, it really depends on your setup, what you do. But yeah, you will be paying sales tax on it one way or the other.
yeah. And I think what you're saying here, because you talked about that earlier, when you have a professional firm like Harquin, what happens is there's consistency. You know, you're posting the right expenses in the right place so that the information you're getting is accurate. You know, you can't make good decisions if you don't have good data, if your books aren't correct. So that was a great question also. So finally, where can they get help to, I mean, obviously they can get help with from you and from Harquin. Tell us a little bit more again about how they can get in touch with you, what you'll do, what the process looks like, and things like that.
Yep. So I'm sure Caroline will be putting it in the thing, but it's harquinbookkeeping.com. And you can go to our estimate page, or we have a link we're probably providing in the thing. And basically, what will happen is you'll give us a little bit of information that'll help us understand the size of your store, what you have going on, if they're multi-location or you have a lot of different sales channels or whatever it is. And then in 2 to 3 business days, we provide a quote, and at that point, we give you a list of everything you need to get started. So we know some of you are very busy entrepreneurs. You might have families or whatever, and you can only get to things at like 2 o'clock in the morning. So basically, we make it so you can onboard whenever you have time and check things off a list, and we make it as easy as possible. You will get assigned your own team, so you get a bookkeeper and a success team for the price of one. So two people always know what's going on in your business. That way, if you're ever someone's on maternity leave or whatever, you have another person that can be there for you in case you need anything with a quick turnaround. Generally, it's like I need to go do a loan, and the loan officer needs X today.
Yeah.
So there's always a person on the team who knows what's going on with your business. Um, so yeah, that's how it works, and we make things run like a well-oiled machine as fast as possible. And the last thing I'll say is, if you're in really bad shape, don't worry about it. We can definitely help even the people who are really far behind. We've done a 10-year catch up before. Uh,
Wow.
yeah, so we
Wow.
whoever needs help.
Yeah, yeah, and I think that that's just absolutely wonderful. I was just talking, or I don't even know where I heard this, but somebody was saying that if you want to go find money, if you want to go to the bank, if SBA loan, clean books are the first step. And and retailers need access. A line of credit is really important if you have seasonal cash flows. A loan is really important if you want to make capital improvements. But if you walk into the bank with a shoebox full of receipts and your books on a legal pad, you're not going to get very far. So, any final questions, Caroline and Indy or Indy?
None that I am seeing right now.
Okay. Well, Lindsay, thank you so much. I mean, it's been an honor to talk to you. And I hope that everybody, well, I'm sure that everybody who watched our conversation got a lot from you and what you know and what you can do. And I would just encourage you to, give a call, find out what they can do for you. That you don't have to sign up, you don't have to become a client, but it's worth it to see if it's a good fit for you. So, Lindsay, Caroline, thank you so much for being here. We'll talk to, and everybody who joined us live, I always appreciate you showing up live at these events. If you're watching this as a replay, I totally understand watching it as a replay also. I'm just glad that you're here. I hope that you found value in our conversation. And yeah, thank you. All
Thank you.
right. Yes. All right, Lindsay, thank you so much. Appreciate it. All right, everybody, take care. See you later. Bye.